Welcome back to the Dividend Diplomats YouTube channel. Guys, you've got your boys here, Bert and Lanny, your favorite dividend investing channel of the world. We're back with another dividend stock, guys. One that's been on the radar, simply because I wanted to buy more back when an incident happened. And the train is chugging back to the price point that it's getting closer to the price point of when I like to buy the stock.
Smash that subscribe button. Give this video a thumbs up. Holla at your boys. Help us reach financial freedom. Let's jump in here, Lanny. We got another great stock on deck for everybody here. You might say we're waiting at the station to see this analysis come through.
Let's get the conductor out here, guys. Let's make some noise. Get the coal ready. The steam engine's about to take off, guys. No, but we're talking today about Norfolk Southern. Ticker symbol is NSC. Yes, the train that made all sorts of headlines early last year for the wrong reasons. Chuck, chuck, chuck,
Yeah.
chuck,
It
chuck,
felt
chuck.
like there was that span with Norfolk Southern where
Oh,
every single week there was another train incident. Obviously, not to make light of it, because there was a lot of terrible stuff in it, a lot of lives that were impacted by this, by what happened in East Palestine and other train derailments. So we're not trying to minimize that. But it was a tough year for Norfolk Southern. That is for certain.
a tough year, but now we're getting further away from it, and the costs are getting more finalized now. And that's kind of was the big discussion in the latest quarterly earnings release that Norfolk had, guys. Because hey, they're saying that there's a $600 or $600 million agreement in principle for the cost of East Palestine. So that was an impact in that last quarter, was a $600 million charge.
Yeah, so obviously that is going to impact that, and that's where you saw earnings per share drop. Last year was $2.04 per share. This year, well, when you add in a $600 million loss or estimated settlement, $23, 23 cents is what the diluted earnings per share was for Norfolk Southern. So pretty large decrease there.
Very large decrease
But that
because
doesn't factor in this. So when management put in the adjusted EPS, which adds back in the settlement, it was $2.49 per share. So they somehow increased earnings by 25% when you look at the adjusted totals.
yeah. So yeah, adjusted EPS 249. Yahoo estimates it has 1183, which I'm like, I don't know how they're gonna get to that. Even on an adjusted basis. But we're gonna use that when we look through the
Yeah.
metrics on Norfolk. But right now they're trying to just really increase operating income efficiencies here. They're trying to get to another 400 basis point improvement in the second half of 2024 by either increasing revenue or decreasing costs. They did reaffirm 2024 guidance. So
Yeah.
despite the charge, they're like, hey, we're flexing. We're going to still achieve our guidance range, which is a positive sign. If you
Yeah.
caught Saturday's video where Cisco, the other stock we analyzed, they went back to their guidance and they said, yeah, we're not going to quite get there. And they smidged it down just a little bit. So
Mhm.
here they are holding firm at their expected guidance from the last quarter that they talked about, 2024.
That's great. And the interesting thing with Norfolk too is they're in a little bit of a activist investor battle right now. They're dealing with Ancor Investments, which this article shows they have over $1 billion stake in Norfolk Southern. So they obviously have a little bit of sway. It was just announced there that Ancor is going to let their CEO keep the job, so let the train keep moving forward. But they won 3 board seats as they were going through it. So noisy investors can bring change to the company. It can be going both ways. Some can make the company pop and have positive impacts, and others can just pull the brake lever. We got a lot of train references in this video here today.
That's that screech on the tracks, guys.
Yeah.
Did you guys buy Norfolk Southern during the crisis of East Palestine? Let us know. I know I grabbed maybe a couple shares here and there, but nothing significant. What about you, Bert?
No, I did not. I stayed away from Norfolk. So the question is, are we going to keep staying away from Norfolk? Or are we going to be running back in? And we're going to do that by running them through our stock screener, which focuses on the PE ratio, payout ratio. history of increasing dividends, and that bonus metric, the dividend yield. Lanny, let's kick it off. Let's hit him with the PE ratio.
Let's hit them, guys. Let's see if this stock is a stock to buy right now or if it's one you should keep on that radar. Trading at $226.33 as of the close of May 9th, Thursday. Yes, we're recording this on a Thursday, guys. Analyst EPS expectations just under 12 bucks. We'll see. A 19 PE ratio. So
Mm,
not screaming undervalued, but not screaming overvalued.
Not what I would be expecting based on how the first half of this video went, to be honest with you. But payout ratio, let's look at it. The annual dividend's $5.40. Payout ratio is still strong. It's in our perfect payout ratio range. It's 45%. So it's a very strong, great payout ratio. Can't complain about that.
When it comes to dividend increases, obviously Norfolk sometimes can have a lot of fun. We're doing sometimes one or two dividend increases in a year.
You're
Obviously, I
crazy.
don't think we expect that with everything that's happened with East Palestine. But the 5-year dividend growth rate on average is over 10.4%, and they've been doing it for 7+ straight years.
That yield, 2.39%. That's 36 basis points above their 5-year average yield at 2.03%. So not a bad little premium right there.
Yeah, so we'll throw up the metrics back on the screen. Again, they were trading well below $200 a share back when the incident happened. I don't know if they'll hit the 1183, but so I'm really looking at them as like a 10 to $10.50 EPS stock. So again, personally, I'd like to see them closer to 200,
Yeah.
almost a 10%, drop.
Yeah. For right now, at these prices, at these metrics, I'm going to let that train pass right through the station. I'm going to wait for the next one here. I'm not, that didn't interest me before with the East Palestine thing. Doesn't interest me right now, but I can see why some people would like it.
I do want to make a note that they increased their dividend in January of 2023 to $1.35. And they haven't had an increase since then. So they have two more quarters to keep their dividend growth streak alive as well. So
Uh,
something to just kind of keep in your brain, or yeah, a little feather in your cap.
Love it. So let us know what you think of Norfolk Southern. Are you buying right now? Are you watching? Or like me, are you letting this thing go right through that train station?
So Bert's letting it go through. I'm watching 10% drop. Let's see it. Let us know what you guys are doing. Bert, what else do we need them to do?
Subscribe, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats. Over and out.